Today we're going to be talking about condos, what you need to consider if you're thinking of buying a condo. Now, first of all, there's not any other videos like this online because I'm going to give you the real deal of what you should be looking out for. A lot of times people go, well, the lender said it's okay, so I'm going to be fine, right? Yeah, let's talk about stuff that lenders are not looking at, okay? So here's the thing. A lot of times people are looking at a condo because single family homes in their area are too expensive. Or it's because they're in a city and they don't want to have to deal with a house, or there's not really houses in that area. The biggest thing that you need to recognize is that if you are max qualified when you're buying the condo, you are doomed. I know that's very dramatic, but I'm going to tell you why. So max qualified is when a lender pushes you as high as they can on debt to income for the loan to be approved. With a conventional mortgage, often that's up to 50% of your gross income. Gross meaning before tax. With FHA, VA, you can push up to 55, 60% in many cases. So the issue with this in condos, I mean, look, max qualifying is a problem overall. I talk about it on this channel a lot, but with condos, HOA dues go up, guys, and it seems like a lot of people aren't talking about that. And what I'm seeing, so I live in Florida now, I'm seeing, people who have condos, their HOA dues are going up 25, 30%. They have special assessments, and the thing that people don't think about with a condo is if the HOAs go up and you can't pay it, it's not like you get to keep your house. I know. HOAs, the majority of that time, have the right to foreclose on you if you get far enough behind on HOA dues. It's a real thing. So you're going to want to make sure if you're buying a condo, you understand the rules of the HOA, because in many cases, they do have the power to push a foreclosure. That's number one. Number two, you really don't have control over the dues increases. With an HOA, generally there's going to be a board and a management company. For smaller HOAs, it might just be a board. But the bottom line is there's these groups of individuals that are going to control how the money for the condo is spent. Yeah, and sometimes people are like, well, I'm sure that, they're very responsible. I mean, maybe. Yeah, there's some condos where they run their books perfectly, wonderfully. They're on top of everything. They're anticipating every need. There's also condos where the people on the board were elected because they're the most popular. Maybe they're not the most financially savvy, but everybody likes, Bob's a good guy. Barbara, she likes to chase people on her golf cart, but she's gonna, make everything work. Doesn't mean they know anything about money. And that's what you need to know as a condo owner, is that when you're buying into a condo, you're not just buying the individual unit, you are buying a portion of the responsibility for the entire development. Yes. So let's talk about that in detail and what I would recommend. So first of all, this is a conversation I have with my clients all the time, and I was actually having it yesterday, and I was like, I need to do a video on this because, look, you may be working with another lender. Why would you do that? Or you may. I don't know why you would do that. Anyways, so let's make sure that you guys know, because I don't want this happening to anyone. So number one, if I was going to go look at a condo, what is the first thing I would be paying attention to? I would be looking at the exterior of the building. I would be looking for deferred maintenance. So what is deferred maintenance? Deferred maintenance means they haven't been maintaining the property. You'll notice that maybe that trim's hanging off, or maybe there's dry rot, or is that siding bad? Wow, that roof looks old. Okay? And a lot of times you see stuff like that when the HOA dues are very low. So people will be like, I can't really afford anything, but this one, the HOAs are only $150 a month. Yeah, about that. So what can happen sometimes with condos is that the board elects to keep the HOAs really low because they can't afford to increase them themselves. And also it's really tough. I mean, look, there's always going to be someone with fixed income. There's always going to be people where if the dues go up, they can't afford it. And some boards are very sensitive to that. However, they're not taking into account that by not raising the dues and maintaining the property correctly, that ultimately all of those people are going to be harmed more, because when the problems get big, instead of being small things that they could have fixed over time, it's incredibly expensive. Okay, I'm going to give you guys an example. So if you watch this channel a lot, you know I have an apartment in New York. So it's a co-op, which is not a condo, but similar concept when it comes to dues and, responsibility, etc. So when we first got into that building, the dues were low for the area. And we're like, oh, this is so great. We were noobs, I know. And when we bought in, we looked at our unit. Our unit was beautiful. It was one of those gorgeous cast iron buildings. I didn't look at the exterior of the building too closely. We didn't look at anything too closely except for our unit. Mistake. Such a mistake. So basically what had been going on is the board had been keeping the dues incredibly low on that building for like the last 30 years because so many people in the building were on fixed incomes. Well, guess what? Now that building, the first night we moved in, it rained on us. It rained on us. Now here's another fun thing. Did they disclose that the building had leaks? No. No. That's something you have to realize. Sometimes you're going to get disclosures back and they're not going to be telling you the full story. It rained on us. So we brought it up. It could have been a fairly inexpensive repair. Nope. 6 years later, they have to replace the entire roof. The people's dues have gone up. They now have what's known as a special assessment. So what a special assessment is with a condo is you have your monthly HOA dues, but if there's a big project like a roof, siding, windows, whatever it is, depending on what the building's responsible for, they can force a special assessment. So in this case, it is a set amount every single month. At first they tell everyone it's going to be a year. Then they're like, no, it's more. It's going to be 2 years. At this point, it's probably going to go on forever. This could have been avoided. Okay, had dues been higher for the last 30 years and problems had been fixed as they came up rather than pushed aside, pushed aside, they wouldn't be in this pickle. And that's what you want to watch out for. You don't want to be in an HOA where all of a sudden, the dues have been really low for so long, but wow, there is a roof that's caving in someone's apartment and it has to be fixed. And now they're issuing a special assessment. You're having to come up with money. That's the thing. With all of this, you have to come up with money. So you have to think about this when you're looking. So if I was looking at a condo, I would be looking at the exterior of the building. I would be looking if there's amenities. I would be looking at all of that as closely as I'm looking at my individual apartment. That's the trick. So when you go into your apartment that you're looking at, if you're like, oh, I'm going to have to redo the kitchen, that's going to cost more than that, $50,000. I need to redo the bathroom. Okay. Do the same thing with the building. What is not being done? Because once you're an owner, you're ultimately going to end up paying for it. That bill may not come year one. That bill may not come year two. That bill is coming. Okay. Right now we're seeing that in Florida a lot. There were some rules that changed after the Surfside collapse. And if you look at like Miami Beach, for example, there's a lot of buildings 30, 40, 50 years old that haven't done what they should over the last 30, 40, 50 years. And they haven't been collecting enough money. And now they have to. And the owners are not prepared for it. The special assessments, there's a lot of properties that are not financeable now because of this. Okay, so you guys are going to look at the exterior, you're going to look at the amenities, and you're going to look at the roof as if it were your own. Because when you're buying a condo, you are ultimately responsible for that when there are repairs due. Okay, so now you're like, well, Jen, the building's beautiful. It's in great condition. Fantastic. Okay, so whenever you're buying a condo, what the lender asks for is going to be different based on what type of loan you're doing, also how much you're putting down. So with some down payments, we do a full review, which means we get into the nitty-gritty. We're going to be looking at the budget. We're going to be looking at the meeting notes. But a lot of loans, we don't look at all of that. You know, you might get a limited review, which is not as in-depth. So you do not want to count on the lender to be protecting you, because we shouldn't be asking for stuff beyond what's required. So the lender's going to be asking for what's required on the loan. For instance, VA, if the condo is VA approved, we don't ask for anything, and it could have been approved 20 years ago. So you guys are going to make sure, because you're educated and empowered, if you're looking at a condo, once you're in contract, that's usually when they'll give you these docs. If they'll give them to you sooner, fantastic. You want that budget, baby. Oh yeah. And on that budget, the two things that, look, I love it. I like the budget because I'm like, what are you spending money on? And we'll talk about that in a second. But it's also really good because what you're looking for is reserves. So any HOA should have reserves. What that means is that if there's a big project that they have to pay for, they have money set aside. Now, if I was looking at a condo and they had $5,000 in reserves, would I buy it? No way. Unless they had just increased dues and they had a plan to increase the reserves. Because here's the thing, $5,000 isn't going to cover anything. Roof, siding, elevator breaks, $5,000 isn't going to do anything. So you need to think about, okay, how new is everything in this building? And if something has to be replaced, will the reserves cover it? And if the answer is no, the way that they get the money to do that is by increasing dues and special assessments. Can you afford that? That's what you have to ask. Can you afford that? If the dues go up 25, 30, 45%, can you afford it? And if the answer is no and they have no reserves, do not buy that property. I don't care if you can get a loan on it. Do not buy that property, because if there are zero reserves, that building is going to need to increase dues or do a special assessment at some point. It's inevitable. It's inevitable. Okay? Now, I also like reading the budget so that I understand how money's being spent. I was looking at a budget recently where the dues actually went up 25%. And this was an expensive building to begin with, guys. This is like one of those ritzy buildings where the HOAs are $8,000 to $10,000 a month. Okay, so why did the dues go up? Insurance was a big part. So when you're buying a condo, you're going to be responsible for insurance walls in on your property, meaning, you know, if there's a kitchen fire, that's on you, your possessions, but walls out is the building, okay? And we see this all the time. You know, we see this in New York, we see it in Florida, across the country. When you're doing a condo, the condo has insurance for the entire development, and insurance premiums are going up. So yes, your HOA dues will increase because of that, okay? So the fun thing on the budget for me on this one was that in addition to the insurance going up, which is understandable, okay? And this building is beautiful. It is maintained. There's, you know, cleaners. It's a palace, right? But 25% is a lot. And there's a lot of people who have been in this building for a very long time. It's going to hurt them. So I'm looking at the budget going, gosh, what could they cut? They have an entertainment budget of $700,000 a year. Yeah. You're like, what? Yeah, guys, that's a thing. That's a thing. So look, if you're looking at a ritzy building, sometimes what they're going to have is an entertainment budget so that they can have cocktail parties, so that they can have Easter egg hunts, you know, all that stuff that makes life amazing, you're going to be paying for. So you want to know, like, look, would I personally buy into a building with a $700,000 entertainment? No, I don't want to go on an Easter egg hunt. I don't need a Mother's Day brunch. And I know you're like, oh, Jen, it's because you're old and you're a hag and your kids are old. Yeah, I don't want to pay for that. I don't. Sorry. No, if I have grandkids, like I will take my own grandkids to an Easter egg hunt. I don't want to have my dues go up to cover this. Here's the funny thing about this building. So this building has a new HOA, and a lot of the entertainment is because of that, and two of the people on the HOA are real estate agents. And I was looking at some of the events, because everyone tells me all the good gossip, right? And I'm like, these are real estate marketing events. That's all this is, but the HOA is paying for it. This is ridiculous, right? Everything that this building, these owners are getting sacked with is ultimately so that there's these parties with high-end people for the real estate agents to mingle with. I know, crazy. Anyways, so that's the thing is like, look, you've got two big things to worry about. How do they choose to spend their money, right? And look, on a smaller scale, you may be in a condo where it's like plantings or something where someone on the HOA is passionate about something that no one else cares about, but because they're on the board, they have a right to spend your money as they see fit. And you want to watch for that. So you're going to ask for the budget. You're going to look for reserves. You're also going to look for stuff that you don't agree with on a personal note. Okay, for me, it's the entertainment budget. I'm sure it was pitched as this makes people want to live here and they'll spend more. I don't know about that. I don't know about that. I mean, they're real estate marketing events. Seriously, it's ridiculous. Okay, so we're going to look at the budget. What else are we going to look for? Meeting notes, that's right. So when you're buying a condo, you have a right to ask for the meeting notes, and that's all the HOA board notes. So the reason that you guys want to get the meeting notes is because that's where all the gossip is. It's that simple. It also tells you where all the potential concerns are. So you could have it where, there's nothing, the budget looks good, you're like, oh, there's like 100,000 in reserves. You could go to the meeting notes and you could see that for 4 meetings in 2023, they were talking about the roof. They were talking about some big project that was going to have to be done in the next 2 years. And that's a red flag to you that, oh, wow, the reserves are not going to cover this. My dues are going to go up. Okay? So if you're looking at a condo, you need to go in eyes wide open. Don't just look at your unit. Make sure you're looking at the whole building because ultimately you're responsible for it. Do not max qualify. Make sure you have wiggle room for when those HOAs go up. Low dues are not necessarily a good thing because if there's a big project, the HOA may not be able to afford it. Yes, many HOAs can foreclose on you if you can't afford to pay your dues or any special assessments. And finally, just to wrap this up, guys, just because a lender can lend on it does not mean you should buy it. There's so much stuff that we do not know about and we are not required to look into. And lenders are not going to be asking for additional documentation because it actually is a problem. If we're asking for more than the program requirements, that can be an issue. So I'm just wrapping it up because I know I was going a little bit long. Also, if you hear that noise, it is the dishwasher. I know, but I hope this was helpful for you all and gave you a couple things to look at when you're looking at a condo. Thanks for watching.